Hi, good afternoon and welcome to Midcap Radar. I'm Samira Abdi and with me is my colleague Reema Tendulkar. Hi Reema, good afternoon. It's the end of the year and we don't have one of those mega rallies, but nevertheless we have some green on the screen and I guess it looks good. The way the US market shaped up overnight, that has actually boosted a lot of sentiment. So as of now, the Nifty is up about 60 odd points, the Sensex is up about 200 odd and the Midcap Index looks to be keeping in step.
Hi Samira, afternoon to all our viewers as well. So from yesterday's lows, the Nifty has seen a recovery of close to about 260 points. And you've also got the futures and options expiry today. So that could add a little bit of volatility towards the end of trade. Let's first take it through all the top headlines, then we'll get cracking on the individual trends. It's a range-bound session of trade. The key indices are off the highs, gained close to about 0.5%. Reliance Infosys TCS lead. The mid-cap index picks up pace, while select private banks drag the Nifty Bank lower.
The next tranche of PSU Bank recapitalization bonds worth 28,000 crore rupees may be issued today or tomorrow. Bank of India is likely to be the biggest beneficiary. Also, sources add that Bank of India, OBC and Bank of Maharashtra may exit the PCA framework.
Crude prices see a big surge overnight with Brent rising above $54 per barrel. Bond yields and rupee fall. IT stocks in top form. Oil marketing companies drag.
Sources tell Network 18 that the government is likely to dole out SOPs for farmers, most likely to remit the difference between MSP and the market price directly to farmers' accounts.
The government tightens the e-commerce FDI policy. Future Retail's Kishore Biani expects grocery players to see operational difficulties. Adds protecting market share will become a priority. All right, let's get cracking on the market technicals. Ashwini Gujral joins in as always. Ashwini, range bound for the benchmark indices. The Bank Nifty has lost ground. Names like Axis Bank are under pressure. How would you approach trade?
See, since yesterday's up move is still intact, I would buy the Bank Nifty here, and because you are getting it at unchanged level, so basically you are getting it at yesterday's close. My sense is the Dow could have another up day, and B, the Nifty and the Bank Nifty are consolidating at higher and higher levels. So tomorrow is a fresh expiry, and if you buy today, generally the first day of an expiry in a market that's overall strong tends to give gains. So this is a good time to enter into Bank Nifty as well as some of these private sector banks. So instead of worrying about the red on the screen, I think it's much more useful to buy into it and get ready for tomorrow, because overall globally there's a multi-day upside that could come in now. Yes, volatility will be there, red, green, etc., and that is why you have options in the market. But my sense is that this consolidation will resolve on the upside, and next couple of hours you could see buying return towards Bank Nifty. Having said that, Reliance is a buy with a stop of 1110, target of 1145. PVR is a buy with a stop of 1550, target of 1610, and REC is a buy with a stop of 117, target of 124.
All right, Ashwini, thanks very much for joining in with your afternoon trades. Also, take a look at the European market. It's opened after 2 days of a holiday, and it's quite a decent move, actually. So between 0.5% to 1% higher on the frontline indices over there. We've seen a dramatic rally in the US markets overnight, and owing to that, we're seeing quite a bit of green on the European markets as well. But back home, here's some news flow that's coming through. It's a CNBC TV 18 exclusive. Hit with a bad festive season and low demand, auto dealers across the country are struggling due to high inventory levels, with auto manufacturers undergoing stock correction drive. In this backdrop, Moto has written to its dealers seeking support in the company's stock correction. Utkarsh Chaturvedi is here with the details. Utkarsh.
Well, what this letter can try and explain you is the current sentiment turnaround. And it is not about Hero MotoCorp. It is a situation all across segments and all across markets that the retail inventories are at a very high level. We have been speaking of the fact that the retail inventories are at a 10 to 12 week level at this point of time, and we are near the year ending. Normally, in this time when the festive season ends, the level of inventories are around 6 to 8 weeks, maximum 8 to 10 weeks. But this inventory levels are at its peak at this point of time, and that is why a letter of such sort has been sent by Hero MotoCorp to its dealers. I would like to read some parts of the letter to give you a sense of what is the sentiment on ground and why is this letter being sent. Now, if you look at the second half of this letter, which it says that today we are facing an issue of high stock at few dealerships, town markets, which we as a team understand is not actually going well, seeing the retail pattern. Also, it says that so I would like to communicate to all of you that at this crucial moment, we need your support and patience in terms of stock management and liquidation, and we will make sure that the current problem will be catered well in the coming months. Now, this is a letter of support, a letter of comfort, which is being sent by Hero MotoCorp to its dealers to make sure that the dealers which are at this point of time in a certain kind of distress, at this point of time in a panic mode. You saw the FADA press release coming in just after the festive season. Speaking of the retail numbers, we are picking up that in January we can again see the retail numbers coming in. So what had happened was that a lot of dealers had stocked in inventory before the festive season. The festive season didn't go like that. And remember that we are talking about a month of December. So a lot of people will not buy a stock which is of the previous year once you enter January, and you will have to really discount heavily, which is happening in this market. But what we are picking up is that the retail situation at this point of time is not really good. The OEMs, on the other hand, whether off record, on record, are telling us that the retail situation has picked up. But our information from the dealers at this point of time tells that the retail situation has not been good till this point of time. Everybody is now looking at January, a fresh start, and maybe a fresh momentum to Motown.
Okay, Utkarsh, thank you very much for that. 2018 has been rough for auto companies, especially towards the end. Let's hope for better times in 2019. But it's been a good day for PSU banks. They've gotten a boost. Government sources say that the next tranche of the public sector bank recapitalization bonds worth 28,000 crore rupees may be issued today or tomorrow. Bank of India, OBC, Bank of Maharashtra may exit the prompt corrective action framework post the recap. Lata joins us for more on that. Lata?
Still sourced information, but we are given to understand 28,000 crores of the overall 83,000 crores that is budgeted is going to come today itself. And of that, a lion's share, 1/3 or even more, is going to Bank of India, 10,086 crores. We understand. I'll just run you through all the numbers. Bank of Maharashtra, 4,498. That's almost 4,500 crore. Oriental Bank of Commerce, 5,500 crores. UCO, 3,000 odd. Central Bank, 1,600 odd. United, another 2,150. And Syndicate, about 1,600 crores. Now, we only concentrate on Bank of India, Bank of Maharashtra and OBC because it appears when you do the math, they look best placed to come out of the prompt corrective action straitjacket. At least two filters they may satisfy. The first of them would be the CET, that is the common equity, the actual shareholder equity. That was for Bank of Maharashtra 5.9, it comes to 7.8 if this entire money goes, which it will, if the source is right. Oriental Bank of Commerce, the CET1 goes from 3.9 to 7.17. Bank of India goes up from 3.29 to 7.53, and so on and so forth. The important point is these guys go above that 6% CET mark. Plus, that capital can be used to provide for more loans. So the net NPA comes down. And therefore, let's come to the net NPA list. You will notice that Bank of India, Bank of Maharashtra and Oriental Bank of Commerce are already like 10 or below 10. So with this kind of capital, it's possible that they will move towards the 6% mark. I think Bank of India will definitely move under 6%. That is the RBI's second filter. You ought to have CET1 above 6 and you ought to have net NPA below 6%. So these three banks have the best chance to move towards that 6% mark. The only other filter that will not be satisfied is that they have to become ROA positive for 2 consecutive years. Or rather, they should not be ROA negative for 2 years. That is, should not be making losses for 2 consecutive years. That will take a while. I mean, they will make their profit only now after the fourth quarter. But chances are the Reserve Bank may agree to remove or dilute that filter if they show enough promise that they will come out of negative ROE. So it's possible that when the Board of Financial Supervision of the Reserve Bank meets and decides the new criteria, these banks may well set to come out of the prompt corrective action list. That's Bank of India, Oriental Bank and Bank of Maharashtra. But again, it's not immediate. The rule has to change. It is quite possible that the Reserve Bank also waits for the third quarter numbers, in which case it may be even 3 weeks from now or 4 weeks from now. But it's imminent, so it seems.